Now, moving on, in Kenya, the Finance Act of 2022 amended the Income Tax Act by increasing the rate of capital gains tax from 5% to 15%. The Finance Act provides that the increase will take effect from the 1st of January 2023. Alex Kanyi, tax partner at Cliff Decker Hofmeyer, joins us on more. Thank you so much, Alex, for making time to speak to us. We're seeing the increase in tax. Did it come as a surprise, or was it long overdue?
First, thank you for having me here. So it didn't come as a surprise because already the other countries in East Africa were a little bit at a higher rate for capital gains tax. So I think the Revenue Authority was looking at opportunities to increase its tax base, and this was one of the opportunities that presented itself.
To break down for us the CGT tax, what are the terms that have been put in place? What are the changes that we should be expecting within the Kenyan markets?
Great. So capital gains tax was introduced in 2015. And what the Finance Act 2022 has done is to increase the rate of capital gains tax from 5% to 15%. And how they intend to implement it is then to, when you're looking at transfer of properties, assets, shares from one person to another or from one company to another, then whatever gain they make out of that transfer, so assuming the land was bought at 100 and now it's being sold at 200, the increase or the gain from 100 to 100, basically the 100 gain, is then subjected to capital gains tax at 15% with effect from 1st of January 2023.
Yeah, I mean, are there particular property and assets that could incur this particular tax, or does it cut across the entire market?
The focus is on land, buildings, and shares.
Yeah, and just looking at that, we've seen there have been proposals that have been put in place requesting that the CGT rate of 15% be reconsidered to a lower value of about 10%. Are there any likelihood that this could be taken under consideration?
Unfortunately, no, because the law is set already and to take effect on the 1st of January 2023 for that particular increase to 15%. Although in the past, for example, in the year 2020, we saw some tax laws amendment act come in between after the Finance Act that was done in that year. And in that case, some changes were also introduced. So there's a slight chance, though I don't see it happening, for stakeholders to still engage the government and request that instead of going to 15%, perhaps we go with a lower capital gains tax rate.
Yeah, and just going forward, what are the projections? Will it in any way put off investors, or will there be really minimum changes to be expected?
Expect minimum change, and just to give it some context, with the new regime and the government that was just put in place just a few days ago, we've seen foreign investors come and invest in the stock exchange. There's been a lot of activity. Even though shares listed in the stock exchange are not subject to capital gains tax, this is an indicator as to the appetite for investors to continue investing in Kenya. So even with the increase in rate to 15%, when you compare this with other countries in East Africa, which are about 30% in terms of capital gains tax. And when you also compare with countries in the southern part of Africa, which range from about 20% to around 25%, Kenya still remains an attractive market, and therefore this will not deter foreign investors or local investors from doing business here in Kenya.
Yeah, and just looking at even the numbers, for example, Kenya is here to adapt to mechanisms to address the inflation adjustment. So such a change, and looking at the current gloom economic outlook, not only for Kenya, but for different countries across the continent. So just looking at this, how will it impact the investment landscape?
Well, I think with the COVID-19 and people trying to still recover from that, and then with the shocks from oil prices globally, I think businesses are ready to move on with the challenges. So it is a matter of comparing which country perhaps provides the best business environment. So like I mentioned, with this capital gains tax, it's not something that is worse off when compared to other countries. So we shouldn't expect investors to not to come or businesses not to continue as usual.
Yeah, as you said, Kenya's CGT rate is relatively low. Could you just unpack for us the regions looking at Tanzania, Rwanda, Uganda? Where are they currently?
So Uganda, Tanzania, Rwanda are at an average of about 30%. And then countries such as Botswana, Egypt, Ghana, South Africa, they are going at around 20 to 25%. So when you do that comparison, Kenya is still lower. And then also for businesses, they are looking at the ease of doing business. So Kenya is currently ranked as number 4 in Africa in terms of ease of doing business. So I think we still have a conducive business environment, and a competitive one for that matter, to continue encouraging investments.
Yeah, despite that, despite Kenya having its relatively lower rate comparing to other East African markets, we're seeing the government could have considered a gradual increase rather than just doubling or even to some extent tripling the increase. So what are the alternative ways that the governments of Kenya could have really gone about this?
Thank you for that. So the alternative way that the government could have looked at it is just putting an inflationary kind of an adjustment to the already 5% that we have. So we normally see this, for example, with excise duty, and recently the government said, excise duty for specified rates would increase by 6%, being the rate of inflation. So it would have been better to just say we apply the inflationary rate to the 5%, which would have gotten us perhaps to a lower CGT rate as opposed to the 15%. And the benefit of that is that then businesses could have had some time to also adjust. And again, it would have been more simple to explain to businesses why we were increasing the CGT rate from 5% to a higher rate.
Thank you so much, Alex, for making time to speak to us. This conversation on the capital gain tax in Kenya takes us for a short break. Stay tuned. We have more lined up on Closing Bell East Africa.